I think I inherit much of my view of wealth from my parents. We're from Tauranga, we grow kiwi fruit for as long as I've been alive. Much later in their lives they realised that they couldn't work till they died. So they really started to change around how can we invest, what can we invest in. My view of wealth is always something that gives me the ability to do what I want when I want to do it. And that was always their thing. They didn't want to be stuck to their orchard, stuck to their job for the rest of their lives. They wanted to be able to choose what they wanted to do, where they wanted to live, and when they did it. My company's called TerraSync. We make soil sensors for agriculture. We're trying to measure the nitrogen, phosphorus and potassium levels of soil. Traditionally, you've got this 10-day sort of period between taking a sample and getting a result back, just for one sample. When you have a 250 hectare farm, one sample doesn't help, 2 samples doesn't help, 10 samples doesn't really help. So we're trying to build a new way to measure the soil to allow farmers to farm the same data availability that other industries have access to that historically agriculture just hasn't had.
So has that impacted then the people who you are studying with? Do you think that's had an impact on their mental health or anything like that?
Some of them, yeah. I think some people are really feeling the crunch this year, although by the sounds of it, it's mostly the first years and second years coming in that are getting hit hard by the end of high school. Year 12, 13 was all online.
Yeah.
Their first year of uni might have been online completely, and now they've been thrust into stuff, and there's like some courses have like 80% failure rates in some tests. Comp Sci 101 is supposed to be the easiest paper. You can do it, no prerequisites, nothing like that. There's like an 80% failure rate in one of the tests this year. So
that's epic.
Thank you for coming on short notice.
Great to be here.
You know, the podcast is there to get relatable stories about what wealth means to people and people's different journeys along building wealth. And you know, it's not just about getting people that have already made it, but also people that are at different stages. And I also think your story is quite interesting, some of your extracurricular activities, but also the approach that you've taken around building wealth and how you've it's all relative, right? Kind of got an interesting perspective and you've made some investments. And yeah, I thought it'd be an interesting conversation to have and hopefully a relatable one for other people. We started off trying to do some like famous features of investors, and the difference just seemed that it's obviously not relatable. Here's Warren Buffett. Like,
cool. What do I meant to do with that?
Yeah, I am a software engineer, and I've just started out. You know, it's a little bit different from Warren Buffett.
Cool. All right. So I'm going to throw some questions your way. So, what does wealth mean to you?
I think I inherit much of my view of wealth from my parents.
Yeah.
They've grown kiwi fruit. That's their thing. We're from Tauranga. We grow kiwi fruit for as long as I've been alive, been on an orchard. And it was always, for them, wealth was always how much money do you earn in the moment, until sort of much later in their lives they realised that they couldn't work till they didn't want to work till they died. And that was sort of the mentality of their parents before them and their parents before that. And so they really started to change around how can we invest, what can we invest in, and they sort of started from a space of not really any knowledge at all, and so it built up around real estate and investments in stocks. And so my view of wealth is always this ability to, something that gives me the ability to do what I want when I want to do it.
Yeah.
And that was always their thing. They didn't want to be stuck to their orchard, stuck to their job for the rest of their lives. They wanted to be able to, for at least the end of their lives, choose what they wanted to do, where they wanted to live, and when they did it.
Have you had any other influences?
I've always liked finance, but it always comes back to my parents instilled that in me. They didn't want me to make the same discovery they did at the same age they did.
Yeah.
So for them, it was always about reminding me early and often, are you saving enough of your part-time wages, and giving me disapproving looks whenever I bought something that I probably shouldn't have.
Okay, so at what age were you where you were like, right, okay, and my parents have instilled this knowledge in me, I'm going to start owning it for myself and start building my wealth? And what were you doing at that point?
I wouldn't say there's an exact date, but I would say when I turned, I think it was 14, my parents said on no uncertain terms that I had to get a part-time job. And then money became very real for me. I felt real rich to begin with, because what 14-year-old doesn't love having $400 and something a week coming in?
Oh my gosh, yes.
I felt loaded. But then very quickly it was like, oh, okay, this isn't actually that much money. I might want a car in a few years. That's however many months and months and months of wages.
Yep.
And so they sort of started steering to me out of just having a savings account and, we'll open you a Sharesies account. I think that was sort of how it started. Sharesies accounts. What else did I have? Term deposits, things like that. So that's sort of where it started. And I started having this mentality of, I almost found it quite addicting, actually. There's something about it more than just having money in a bank account that's like, oh yeah, this is a fun game. I like this game.
Yep.
And that's almost what I've treated it as since. Like, this is a really enjoyable game.
When it goes the right way.
When it goes the right way. When it goes the wrong way, it can be entertaining.
Yep. And lessons learned, I suppose.
Yeah.
So what are you doing now then to grow your wealth?
Well, obviously I'm at uni at the moment, so
Yep.
I've lost a lot of the earning potential. But I've always worked over summer. I do internships over summer. So that pays well. So now I'm mostly trying to build my own company now. I think that's my sort of new route to wealth. But I still have lots of investments in stocks. So I have some real estate stuff through PMG, which is a property management group
Yep.
in Tauranga. That's sort of another one of my parents' things. Is the only reason I was able to get in is because they were already in. So another sort of thing I've inherited from my parents there. So sort of started moving out of the standard retail investments into the VC kind of world and looking at this whole different, trying to get in as early as possible, because most people don't even think about this or have the ability to get in on this early on. So I'm starting to use this earning potential that I've had over the past couple of years with internships and whatever, even if it is limited, to sort of how can I accelerate this as much as possible.
So tell us a little bit about the company that you're working on.
Yeah, so my company's called TerraSync. We make soil sensors for agriculture.
Yeah.
And we're trying to measure in situ the nitrogen, phosphorus, and potassium levels of soil. So traditionally, when a farmer wants to know that, they have to take a soil sample, bag it up, send it off to a lab. Lab gets back to them within a week or whatever. So you've got this like 10-day sort of period between taking a sample and getting a result back. And that's just for one sample. When you have a 250 hectare farm, one sample doesn't help, 2 samples doesn't help, 10 samples doesn't really help. And so we're trying to build this a new way to measure the nitrogen, phosphorus, and potassium in the soil to allow farmers to farm with the same sort of data availability that other industries have access to that historically agriculture just hasn't had.
Yep. And how's it going?
It's going good. I've co-founded it with one of my friends from high school who's also at uni with me. We're in the Sprout Agritech Accelerator program at the moment. So we're about 3 weeks away from finishing that. So we've been working on our pitch, refining parts of the business, trying to work out our business model, who actually wants to buy our cool tech. Because we went around it the completely wrong way. I'm a computer science student, so, this tech's real cool, I love this. But who actually wants to use it?
Yeah.
And the answer at the beginning was no one. Like, no one actually cares. Just saying, hey, we can measure this. They're like, cool. What do I do with that? And my answer at the time was no clue.
Yep.
And so part of this Sprout being an agri-tech specific accelerator was about when we pull this off, what's it actually going to be used for? What's it going to tell farmers? What are they going to do with it? Because the average farmer doesn't actually care about the exact to the point nitrogen value in their soil, because they farm like an art rather than a science at the moment.
Yeah.
Does that mean that what do you think the obvious problem is then with the product? Like, are there times where if you had these sensors, is it a physical product?
Yes.
So when you have this sensor, they could know much earlier. I guess they find out if the crop is bad once they basically get the yield.
Yeah, at the moment you have the problem where you apply your fertilizer and then, you get to find out, did you apply enough when the crop comes out? And that's because the kind of the testing process isn't good, isn't robust, doesn't give you enough data points to understand anything. It's more of just the status quo is actually that these tests are all done by the companies that make the fertilizers. So Ravensdown, Balance, come to your farm, do the soil tests, and then tell you independently that this is based on these results. You should apply this much of our fertilizer, this much of this one, this much of the other. And that whole process just kind of doesn't sit right with me. And from our customer interviews, a few farmers have reported that when they move to actually independent fertilizer recommendation plans.
They use less fertilizer.
50% in some cases.
50%. Whoa.
That is interesting. So you may not know this yet, but for each sensor, how much of a radius are you getting kind of coverage of?
So the detection radius is actually quite small, more like a 5 centimeter radius on each probe, but it's built around the fact that if you collect a lot of data points across your farm, it doesn't matter if you're only measuring a 5 centimeter area, because the soil because farmers farm averagely, you apply an average amount of fertilizer to your field. So the likelihood of one spot being inaccurate is reasonably high, but when you have 50, 100 spots being measured, the chances of a majority of them being inaccurate or not representative are quite low.
And is it like the sensor then connects to a phone?
Yes, so we're going with a cloud approach. Each sensor acts independently, sends its data to the cloud, and can be viewed in an online platform.
And if I'm a farmer, would I have many sensors?
Yes, you would have many sensors. So our goal is to build them cheap, because there are existing solutions out there to do a similar thing, but they're egregiously expensive, sort of $3,000 per unit. No farmer can afford to deploy on that scale. So we're targeting a significantly lower cost than that by using an alternative sensing mechanism.
Oh, cool. I think we just had our previous episode, we were talking about the outside of equities and property, and most likely a better outcome is obviously if you can build your own business, and how the outcomes are often far greater than your typical investments, because you can dictate the outcome, but you just generally have an opportunity to get much greater returns, especially in the early days. Obviously, once your business is established, it may then be growing at more of a traditional rate, and the equity value that you're able to get is probably closer to the equity market. But in the early days, that's where you get that kind of early growth, and you take kind of market share of something that obviously when you go from 0 to 1, basically. So yeah, it's great that you've got onto that so early. You've obviously invested in a bunch of startups now, and you have a pretty interesting equity portfolio that includes crypto and US equities mainly.
Yes.
And you've also dabbled in options.
You could call it that.
Which we will probably talk less about the options because it's so degenerate, even though I love options.
They are good, aren't they?
They are. Helena, do you know much about options?
I know nothing about options. Do you want to tell me about them?
Me too.
I trade them, but I don't know much about them. That's kind of how it feels sometimes.
Yes.
Options are, you have the option to buy at a specific price in the future.
Yeah.
And the price you pay is the premium, and the premium is typically based on time and the volatility of the price of the asset.
Yeah.
So in equities, it's very complex and it's a very competitive market, especially in the US. If you go to India, for example, lots of options action, but not as competitive as the US. If you trade options in Australia, and I have traded quite a lot of options in Australia, I like it because it's less competitive. They're wrong more often.
Yeah.
People that sell you the options. Or that's maybe my biased opinion about people that sell options in the US. In Australia. But, you could even do it with a property. You could go to someone that owns a property in Auckland and you could go, hey, I would like the option to buy this house at $1 million, and I would like that option to exist until the end of the year.
Okay.
And I'm willing to pay you $3,000 for that option. And then they can basically accept or decline. So they're saying, okay, you have the right to basically buy this property at $1 million until, I don't know, Christmas, right?
Yep.
December 25th. And if you don't buy it, I'll get the $3,000 and then you'll no longer have that right.
Okay.
So that's how options work. And they have a limited downside because you're paying just the premium.
Yeah.
So in the example of equities, you might say, I buy an option to buy Tesla at $200 a share. And let's say the premium is $1,000. All you can lose is $1,000. But your upside is much greater.
Yeah.
However, most options do expire worthless in the stock market. So the people that sell you the options are the ones really making the money.
Yeah.
Yeah, that's a little thing on options.
Yeah, no,
options
that's
are
good.
really interesting, and you could do a lot with them as you kind of learn more about them.
However, they have a lot of pitfalls and traps. And
Totally. So many traps, especially if you're trying to sell them.
Yeah.
because that's where you really get into trouble. Outside of buying them, it's just you're most likely wrong, and the premium that you pay is going to be worthless.
Yeah.
So it's not really an investment strategy on its own, I
Yeah.
think, but it can be complemented quite nicely with a robust investment strategy that already exists. But for the most part, dollar cost averaging and building a nice equity base across a diversified pool of assets is the way to go. But options are just a very interesting game, I would say.
Game, yeah.
They are a good game.
So you are obviously quite busy. You've got your company that you're building, you're finishing up university. So what do you do to balance that, to help you with your headspace and health and all that kind of thing? Do you have anything that you're focused on in that space?
Well, I think Charlie was inevitably going to bring up my extracurricular. So I play a sport called underwater hockey.
Right.
Which is exactly what it sounds like.
Okay.
It's hockey underwater.
Yes.
More like ice hockey than field hockey. It's
okay.
Contact. We play with a puck.
Oh, okay. Yeah, weighted, obviously.
Yes, weighted, very heavy, like a kilo. We have short sticks, we have fins and mouth guards. And
yes, proper
and stuff.
Do you have to have proper helmets and that kind of?
We wear water polo caps just to protect our ears.
Yeah.
But look it up. It's a real strange sport.
Yeah.
So that's my sort of side thing. So I play for the under 24 New Zealand men's team at the moment.
So it's big enough to have a New Zealand
team. It's big enough to have a New Zealand team, yes, yeah. And so this year in July, I'm off to the age group world champs in Kuala Lumpur. So that'll be a fun thing. So that's sort of my, as hard as it can be and as difficult as training is and playing and whatever, that's sort of my headspace reliever. It often doesn't feel like it at the time. So oftentimes it's not fun at the time either.
Yeah.
But afterwards you always feel good and feel ready to, even if you're tired, feel ready to take on more work, or it's a nice break from it. It's the sort of more physical side of life as opposed to the other 95% of life, which is all thinking.
Yeah. Okay.
How did you get into it? So random.
Yeah.
Yeah. So Tauranga, for some reason, is pretty good at it as a region. And when I was in my first year of college, they had some reps come round to all the schools and said, if you want to try playing, come along this weekend to our open day or whatever. And I did. I didn't really like it, and now I'm here playing 8 years later.
So you have to be good at swimming.
You got to be good at swimming.
Did you play hockey beforehand?
Nope. I was like football and stuff before that. But yeah, so no prior experience, but yeah, good at swimming, good at holding your breath.
Yeah.
Physically strong also helps because underwater you don't have that same disadvantage of weight that you get when you're on a land sport. Doesn't ruin your joints as badly. So you can be physically bigger. So yeah, all those kind of general athletic traits tend to help.
Yeah.
What are the injuries like? My brother used to play ice hockey, so he was always getting injured with broken ribs and that kind of thing.
Yeah.
Quite different in the water?
You don't get the kind of real hard impact injuries from player-on-player contact, but because the puck's so heavy and we can pass it up off the ground, often like half a meter more than that.
Okay.
It moves quite quick when it goes through the water, so you can end up with some pretty nasty splits if it hits a bone-on skin kind of area. But you always come out with bruises and kicks and whatever. It's all part of the fun.
Yeah. So not a low level kind of non-contact sport.
No, definitely not a no-contact sport. Certainly not like field hockey is.
Yeah. Okay.
Yeah.
So how much impact do you think people's social network has on their ability to kind of focus on wealth and build it?
If you'd asked me this maybe a year ago, my answer would have been not much.
So what's changed?
I think. But since getting the Potentia Computer Science Scholarship this year and being exposed to the social aspects around that, meeting different founders like Charlie and stuff like that, my sort of view has completely changed. I was always sort of, it doesn't really matter what anyone else is around me, I can do it myself. But seeing all these people, meeting these people, building these new connections that show me that you're sure you can do it without that network. But there's when you have the network, there's the chance to do something much more than that. You can accelerate the whole process. So yeah, I think now I certainly think it's very important.
Okay. And so like you know, like your business is going to grow, and I'm going to assume it's going to be successful and that kind of thing. And, you know, you might at some point want to have a partner or something like that. How would you approach getting that person on board with your wealth journey or how you define wealth? Because it's important in a relationship, right?
Absolutely. I think it's not something I've given a whole lot of thought to up to now, but as you said, it is a very important thing because in many ways it determines the trajectory of your wealth for the rest of your life. And I think my perspective that if it's something you have to get someone on board with, it's probably not right.
Okay.
I think the right person would probably already have the right sort of frame of mind about that, because otherwise there's always this sort of nagging like, oh, are they just tagging along with it because it's what I said? Is it all going to fall apart? Is it just are they just putting up with it? And if you're just putting up with something in a relationship like that, it's never going to work.
Yep. Okay. Fair call.
So how would you screen for that?
How would you screen?
I don't know, a 20-question survey, Charlie.
Yeah. Potential partners. Can you complete this first, please? And then if you can get past this.
Yeah, mandatory screening process with 2 interviews and a take-home assessment.
Well, you know, you could try it. You would seem really like kind of together and organized if you did that.
It seemed like something else, but I don't think I can say that on here.
Don't know if you want to be that, yeah.
Yeah, maybe give it a miss. But I mean, you can try it. You can A/B test, right? You try with one prospective partner, and then with another, you don't give the survey.
That's very true. That's very
So A/B testing is always very important.
Suspicion and intuition that the survey is not the way.
Gut feel. Gut feeling is also very important.
Yes. So if you were to give advice to anybody who was starting out, like they're like, okay, this is something I want to focus on, what advice would you give?
It's a tough one because there's so much awful anecdotal advice out there, and in a lot of ways the best way I've heard it put is when someone else tells you how they succeeded, they're just giving you their winning lottery numbers.
Yeah.
And that's not really the way to go. Your success will be so different from everyone else's, but there are these sort of fundamental skills that you build, like just that enjoyment for saving or investing money. Because some of my friends are like, oh, why do you invest all your money? And it's like, oh, because I like doing it.
Yeah.
And I think if you don't like doing it, it's always going to be a real task. So you need to build that love for doing it. And there's a lot of different ways around that, and there's a lot of incorrect ways to do it, like investing in real niche things, like thinking that your wine collection is a valid form of investment or whatever. But building that fundamental enjoyment, however you need to do that, whether it's through, do you find satisfaction just with ETFs, or do you need to try and invest in individual stocks? You've got to find some way to make it enjoyable for yourself, because otherwise you won't do it, because you've got to do it for the next 60 years.
Yeah.
And if it's always a chore, the chance of you doing something that's an absolute chore for the next 60 years, it's just not going to happen.
I think 2 interesting things that you brought up there. One being around kind of what you invest in is really interesting. I wanted to kind of dive a little deeper in that. The liquidity side of things, like, my wine collection is worth what? Well, go and sell it. And then, because that's something, again, that's come up on the podcast before, which is, and it'll come up in the future, is, liquidity is such an important part of investments. You don't want to be necessarily in a situation when you were maybe 60, 65, 70, and you're having to sell assets and take a long time to do that, or even do reverse mortgages because you just don't have that ability to get liquidity. And I think the other side of it that's quite interesting, and it's at least how I've approached investing, is when I allocate capital, it's gone in my head. I never get it back. And not that I'm willing to lose it, but I'm not willing to have it in my mindset that I will withdraw it. That's just a personal thing that I've done, in just terms of I'm not spending this money. Well, I'm spending this money to buy an asset, and there's no way that I'm going to spend that money that I've allocated into buying an asset on a pair of sneakers or something like that, at least for the time being. And that's kind of something that I did early that resonated with me, and it was just like, yep, this is gone. And I've treated it a bit like every time I do it, it hurts, because, being, I guess, unable to spend money on the nicer things in life can be a bit frustrating at times. However, your future self will
Well, thank you. Totally. I think nowadays there's a lot of people out there who are living quite materialistic lives, and it's the choice between, that quick, high of, okay, I really want the shoes versus, hey, actually, when I'm whatever age, I want to have the freedom to be able to make the choices that I want to. And it's trying to get people to realize that, short-term pain, long-term gain kind of thing. And there's different conversations I've had with people, and there's some people who are they are just after the quick fix kind of thing, not the long-term where I'm going to be at. And for some of them, the partners that they've partnered with are of the same mindset. And so the conversations I've had with some of them have been around, 40 years down the track, where do you see yourself? And a lot of them are like, oh, I'm retired, I've got my own home and all that kind of thing. And I'm like, okay, so is that actually going to play out for you the way you want it to? Like, is that going to give you the freedom and the travel and all that kind of thing that you want? Whereas your comment earlier around, that liquidity piece, but also having, a few other things going on, so you're not knuckled down and have to sell that equity, and you may not be able to access it as quickly as possible. I think that's really important.
Yeah, I think that all forecasts are wrong, but it's really good to take the time to really think about it. So doing a forecast isn't, this is what reality will look like in the future. It's actually more, I have taken the time to think about it critically and tried to understand what the future looks like.
Yeah.
So there's obviously a skew between what's going to actually happen and what you believe will happen, but it's really important, especially in startup land. Like if someone's looking at building a business and building any sort of startup, running a forecast and actually thinking about your costs and your growth and the unit economics are super important. And it's what investors look for, because it shows that you've thought about it. Now, it doesn't necessarily have to be true, and any investor thinking that a forecast is actually going to pan out is probably quite inexperienced. But it's about how did the entrepreneur think about the problem and think about the forecast, and what safety mechanisms did they put in place for if things don't turn out. So, having multiple forecasts for different scenarios is always an interesting thing. And, a business and a family balance sheet and a family forecast, there's not that much difference between a personal and a business forecast. You can do it, and it is good to keep it simple, but it's also good to do it just so you can think about it. Like, at my current trajectory, what is it going to look like in 25 years?
Well, I suppose off the back of that, where do you see yourself in 25 years?
Yeah, well, in 25 years, sort of, it's a long time away. What am I, 46? I think a lot of this stems from my parents. Again, I watched them work incredibly hard, and a little selfishly, I never want to work that hard, particularly when I'm that old. That seems really boring. I don't really like the sound of that. But I think my whole financial ethos or plan is built around not fixed to retiring at a certain age or buying a certain thing at a certain time. My whole thing's around being able to do what I want to do when I want to do it, and whatever that looks like.
The freedom, right?
Yeah, most of it's built around flexibility and ease of management, and because sure, there's ways you could earn more or whatever, but do you want to do that? Do you want to deal with to get the 1% extra? Do I want to deal with the 50% extra work of managing this or that and optimizing this? It's just built around how easy is it to do, and can it give me the freedom and the flexibility that I want in 25 years? So what my life looks like in 25 years, no clue.
Yeah.
With the amount it changes every single year that I've already lived, I have no idea, but I know I want it to be flexible and free.
Would you say you're already there in some ways? I know that you're at uni, and I don't judge you too much for that. Well, a little bit, especially with how smart you are. Do you think you're kind of in some way there because you're building your own business? You've started to build your network now. You're allocating resources, whether it be time or capital, to different things. So, if life looked relatively similar in 45 years, do you think or 25 years, would you be happy?
So if life looks, uni really spoils you in terms of free time and kind of doing, for most intents and purposes, whatever you want. Sure, it can be hard sometimes, and there's hard weeks or whatever, and things to deliver, but for the most time, it's actually pretty chill. And part of the sort of in my final year now, so there's this reckoning of life is about to start
Right.
for real in the next year, and that's part of what's driven me. I'm like, if I could live somewhat like this for the rest of my life, that'd be pretty sweet. Sure, I have some things that need to get done, but for like most of the period of time, big long breaks or whatever, most of the period of time, I can sort of do whatever I want, chase whatever interests are interesting me at the time, get up when I want, go to bed when I want to, whatever I want during the day. So I think chasing part of that.
So how do you feel about having kids?
Yeah, well, you're not really selling it to me, if I'm honest.
The kids are awesome. He was not communicated with well enough before that he shouldn't come in. So
Set the scene.
So you gotta set the scene. So yeah, no, I think that like trying to design your life the way you want it. I think you're quite fortunate that your interests are of high value in the marketplace.
Yeah.
And going after, again, I think we talked about this in previous episodes about learning a lot and learning kind of rather from analogy from first principles. And I think that if you learn an engineering kind of subject at university, you learn kind of what is true or what is known to be true and really true rather than kind of analogy or kind of, I guess, less hard truth. So I think that's really beneficial.
I think part of the fact that I enjoy learning is what drives me towards wanting this like free and flexible life. Because what I enjoy learning about changes like week to week, day to day even. Like some days I might feel like working on this or learning about this thing. Then other days it's a complete 180. And I think being locked into something sort of inhibits that. But uni almost allows that because you have you have the obligations, but you have the free time to go and learn about other things. And the idea of working a 9-to-5 job for the next 40 years doesn't really align with that notion of I like learning about lots of different things.
Would it be okay if it was 10 till 6?
No.
What about 9 till midday and then, I don't know, 5 till 10 or something?
I don't want to split shift.
You don't like split shift?
No, I don't like split shift.
That's why I train in the middle of the day, is to get that
that's
context switch, especially with trading the strategy. That takes a lot of my evenings, late evenings, and then early mornings, typically 6 till 8 a.m. in the winter for New Zealand, which is a bit frustrating. I prefer the summer because you get until 11 a.m. But I actually like context switching, and I've kind of built, I guess, my personal schedule around being able to context switch from building product and allocating capital. And that's worked really well for me. And I break it up with jiu-jitsu, which is a fun way to do it. But it used to be surfing. And I think if you can have something like you do in terms of the underwater hockey, of all things, that helps you kind of get out of the, like you were mentioning before, that constantly thinking. You know, when you're a knowledge worker, I guess, you're just constantly trying to solve problems in your head, and it's using neurons, and you don't really get. You can almost fry your brain if you don't stop thinking.
So yeah, I don't mind context switching, but I don't like the idea of having to context switch at a specific time. I'm very much sometimes I could sit down and work on something for 8 hours straight. I wouldn't even notice that the time's gone by. But sometimes like an hour and a half goes by and I'm like, okay, yeah, I could do something else now. Let's go to the gym or let's go training. But I don't like the sound of.
Do you think that going to uni during COVID has broken you?
Yes, absolutely.
I kind of feel, and we've hired engineers that went through uni during COVID and such around that space. And we were always kind of remote first, but we are obviously in person. I think that's really important. Super important in building a business is being in the same room, I think. But COVID really changed, that perspective, and it's hard to revert back, right? And you probably will. Well, you'll definitely fight tooth and nail, to go back before you go back there. Do you think that's a net positive thing for society?
Yeah, I would say so. I'd say it's a net, at the very least, it's a net positive thing for workers. So I think maybe businesses will find the percentage efficiency drop or drop in output or whatever. But I think the mentality shift that sort of happened throughout COVID around this, being able to pick things up, put things down, sort of exist in your own environment and have your work exist around you rather than you existing around work, is probably a permanent psyche change. Because it's one of those things you experience it and you're like, this is great. This works really well. It frees up all this time. I don't have to be anywhere at a certain period of time. And really the enlightening thing for me was about 8 weeks of my final year of high school was in COVID lockdown. So I did 8 weeks of high school from home. And usually I'd spend 7 hours a day at school, get there at like, at 8:15, leave at 3:15. I could have all my schoolwork done for the day in 2 hours when I was working at home. And it sort of opened my eyes to, am I really spending 5 extra hours at this place because of traditional, like habit or traditional whatever? And then that sort of carried through. Now I observe everything under the light of like, why does this have to be this way? Are we wasting time? So I think COVID really brought on that. I don't know, maybe it happened with other people, maybe it's just me.
No, I definitely think
it has brought on a psyche shift.
I think it's happened broadly. And I think that businesses have to, well, I think it's hard. I think that you have to almost be lucky enough to be in an industry that allows for it.
And that, you can do
for
that.
one.
Yeah.
And if that's something obviously that's a high priority for you, there are certain career paths that it works for better. And we were talking about it in a previous episode about fractional work and how more people are taking on multiple gigs and having side hustles and such. And I think that also was birthed from, the pandemic.
Yeah.
And I actually think that's great for individuals because it makes them less fragile. You think about kind of career workers in one job, like you say, maybe 9 to 5 for their entire career. They're always at the mercy of their employer. Whereas someone that's got 2 fractional positions is kind of less fragile in that sense.
Yeah, and diversifying your life.
Yeah, it's cool. I do think it's a net positive. I just think that businesses have to work out how to maintain that productivity without it impacting the bottom line, for sure. And culture. I think actually culture is the hardest piece about remote, is that you don't necessarily build that same level of closeness and relationship with your employees anymore. They're kind of passing in the wind, right, with your role. Whereas before you might be, sat next to someone for 8 hours in a day.
You build those relationships,
And what you do get the benefit of is those idiosyncratic exchanges where maybe we're both working on the code base and someone comes over to me and says, this is the problem we're facing. You overhear it and actually you have a vital piece of context that then resolves something much faster. Yeah. Whereas if it's online, you have to schedule a meeting and then we have to know to invite you in order to get that. So I think there's some really kind of important things that businesses have to, and startups have to kind of face as there are more and more startups starting remote first. I mean, that's why you see in Silicon Valley, you think about Y Combinator companies, they often rent a place and they just all live in their house, in the apartment that they rent, and they just build the business from there. And they truly do get that, that closeness with the employees and their co-founders. So your co-founders in Auckland with you?
Yes, yep. So he lives nearby in the city.
Where do you do most of the work?
Remotely. We just work mostly remotely. If we have meetings and stuff, we'll have them in person, but we try to minimize meetings as much as possible. We try to work as asynchronously as possible.
And it's mostly programming from both sides, or?
Yeah, mostly programming from both sides. And
where do you
co-founder does a lot of the businessy stuff as well.
Oh, okay, cool. Awesome. It's been great chatting. Awesome to have you on. I think your story is very interesting, especially the underwater hockey.
No, I knew that one would come up.
Well, I mean, it teaches you to hold your breath for a long period of time, right?
It does.
That takes discipline and shows resilience.
Very true, very true.
Awesome. Thank you.
Thank you.
Nice to meet you.
Where do you